Welcome to Portfolio Playbook. I'm your host, Damanick Dantes of Dantes Outlook. And on today's episode, we're excited to welcome Abdulelah Alfouzan, a fellow Chartered Market Technician or CMT. He's based in Riyadh, and Abdulelah is an equity strategist and investor relations leader, currently leading investor and corporate relations at Saudi Arabia's National Center for Privatization. He brings a technical lens to global markets using tools like relative rotation graphs, ratio charts, and market breadth to spot leadership trends across sectors and asset classes. Before that, he held senior roles at Amazon and Microsoft, so he combines real world business experience with a disciplined, market driven approach. He's also very active in the CMT Association, mentoring and helping grow the technical analysis community in the region, and now recently launching the Riyadh chapter, which we're very excited about. And the timing couldn't be better. Abdulelah joins us as we head into the upcoming CMT conferences in Riyadh and Dubai next week, where technical analysts and investment professionals from around the world will gather to share insights and build connections. Abdullah, I'm so excited to have you. How's everything?
Everything is great. Thank you for having me, Dominic. Glad to be here.
Great, great. So just give us a general introduction, your educational background, and what drew you to the investments industry.
Sure. So maybe I could start from the very beginning. In my early days, I was one of those students who did not know what they wanted to do once they graduate, and I was studying business back then, which is pretty general. And luckily, when I graduated, I wanted a role that enabled me to get a quick sense of the business world. So I joined an entity called Saudi Industrial Development Fund, which is essentially a government industrial bank that grants soft loans to the industrial projects that they want to start new projects or new expansion lines supporting the industrial economy in Saudi. I spent around 4.5 years there doing credit analysis, and that's essentially analyzing the credit status of those applicants and it's making sure that the project that we provided loans for could pay back essentially the loan, and there were reasonable collaterals tied against those applicants. After spending 4.5 years, I said I want to do something maybe different, and I didn't know what to do, so I went for an MBA, and I wanted to change of scene. So I did my MBA in Spain. That gave me that more cultural sensitivity and understanding the global participants generally. I made amazing friendships there, and after spending around 1 year and a half, I think 1 year and a half, I wanted to go back to Saudi, but I wanted to do something that I was more interested in, essentially the technology sector. But of course, I did not have a background in technology other than my 4 years and a half in the undergrad. And I wanted to do something around business development or sales and marketing. Luckily, I got a job at Microsoft, but the problem was I was allocated towards a sector that I had no idea about, which was education. Uh, After spending around 6 months on boarding and understanding how the education landscape was, uh, I supported the rest of the team in building the education story that helped them and helped Microsoft Saudi selling more educational products or products that could support education eventually. After spending, maybe I want to stop here and mention that during my time in Microsoft, I was exposed to actually the owning a US stock. Upon my joining, and within the employee ESPP employee stock purchase plan, yeah, I had my first American stocks within Microsoft. And what a time it was! It was in 2014, I believe. The stock was trading at 40, and within months, that wealth started accumulating. I said, okay, maybe I wanna pay attention towards this area that could help me grow my fortune.
Interesting.
I used the stocks app within my iPhone to get access to this. What's happening with Microsoft and Google and Amazon and Apple and all these technology players? It was my source of info. And after a while, I started noticing that what was priced at 40 now is trading at 55. And then it's trading at 60, 75. So it's doubled in value, while the other stock markets basically languished. doing nothing at that point in time. So I started paying more attention. And my initial idea was I work in technology, it's growth focused. So maybe I should focus on stocks that could eventually grow. And my understanding back then was smaller companies could grow faster than the bigger companies because of the laws of the large numbers. And I was doing research around those companies within the software industry, and I think I was right at some point. I'm not sure if I was right or maybe I was lucky because I was being at that period in time where the growth trade was doing extremely well. Uh, I was hooked. So I was selecting those stocks and making money and thinking I was the smartest person in the world. But before you know it, I started making mistakes, and those mistakes started appearing and reappearing again. Mm. So I was holding these stocks for 18 months period. I was making a nice 30, 40% gain. But essentially, when I sell them, the stocks rally. It's another 45, 50%. And this pattern kept reoccurring and happening. I said, okay, I cannot be that unlucky. There's something I'm doing wrong. And of course, 2018 happened, and I was losing a lot of money, and I had no idea why, because the companies were doing great, they're growing as they're supposed to. So where is wrong? So this is where I was introduced to technical analysis. Before understanding what technicals was, I was really afraid of opening a price chart. We as technicians now think this is the first thing that people do, and rightfully so. This is what they do. But the general answer would be no. This stock has risen 50% in the last 30 months, 3 months. Why should I buy it? So it was really intimidating. But that was one of my intentions to understand what technical analysis was about, how to analyze price charts. So I stumbled upon Investopedia, JC Perez's first introductory course about technical analysis. And I was really hooked. It made a lot of sense. I kept seeing the patterns that I was making mistakes in them. It covered an area that was very hard to execute, which is risk management. And when you're buying into a company and you're there for the long term, it's almost next to impossible to manage your risks. The only way you can manage your risk is by reducing your position, and you cannot do that if you are a retail trader who doesn't have an understanding about risk management and portfolio construction. So technical analysis gave me a very accessible way to manage my risks.
Yeah, nice. And going back to what got you into TA or just a structured process, right, is usually just born out of mistakes. And I think it's interesting that you followed the tech wave up, right, that was contributing to the market gains. And then you said these outside factors. I remember 2018 was like the Fed scare, and we had like growth factors and all this stuff. How did you incorporate the macro backdrop into your process using technicals in a way? Was it through like intermarket analysis?
So back then, I had no idea. I was only merely strictly looking at the stock or the fundamentals of the company and totally disregarding the market direction. Yeah, maybe one very important factor that I forgot to mention. At that point in time, I remember reading William O'Neill book about how to make money in stocks. And I remember the first 100 pages was mostly about charts. Essentially about charts, and his idea was fundamentals are super important, but so is the market direction. So I totally ignored that market direction part, and I was just purely looking at the companies and their competitive areas. So back then, in 2018, no, that was never part of the process. Today, maybe things are a little bit different. Yeah. Today, I use a lot of proxies and I use a lot of top-down approach that helps me understand where the current situation is. I believe that nobody is smarter than the market, and it's really important for us to understand all these puzzles and tie them all together. So to get a sense about what's happening in the world. So one of my ways is looking at globally the market breadth. So every month, I spend some time with my coffee on a Saturday, just chilling and watching all these charts for the most important charts that I believe, which are of course, all sectors within the US and the S&P, but also the other markets, even though if I'm not trading them. So markets like Poland, India, Japan, Korea, China, Germany, UK, Italy, Spain, Brazil, Chile. I look at every single one of those ETFs to understand where are we at from an equity standpoint. I also look at bonds. And the idea when I look at bonds is not to trade those ETFs specifically, but just to understand where if there are sharp raises or big rate of change that's happening within the bond market that could potentially freak out the market. So essentially what I'm looking at is a slow grind, hopefully to the upside for those bond ETFs that are hopefully pushing the yields down, which could be now, at least in our environment, is a catalyst for stocks.
Yeah.
Also, I look at the ETFs, the commodities plus Bitcoin. Bitcoin is a big risk on measure at the moment. And it's really important to know what that asset is doing on a very longer time horizon. And also the gold and the uranium and the oil and the copper, which give you a sense about the economical and economical cycle. So putting all these things together give me an understanding about where we are at now and understanding if I should be allocated more towards risk on or maybe risk off. To me, risk off is not really about owning utilities and or healthcare and staples. It's maybe having some cash or maybe putting it in money market funds that can generate some money while the market really solve itself at the
Nice.
moment.
Yeah, we use a similar process of looking at breadth and relative strength across different asset classes. And I think the great thing about relative strength is that you don't have to forecast the environment. You can see the flows and the shifts ahead of time just by capital allocation in the market, right? A perfect example, I think, for us was highlighting when the gold to stocks ratio was increasing in Q4 of last year. Like it could be a risk off signal, or it could just be saying like, hey, this asset class in the numerator is stretched and there's opportunity for the other asset class to emerge, right? Going back to 2018, it could be just looking at the bond market and saying something is awry and this might impact my stock positions. Even though Microsoft could be resilient, there's an exogenous factor at work and you can allocate your capital to something that's, you know, more resilient, right?
100%. Yeah.
Nice.
And also sometimes looking at all of these things, and if something really doesn't add up,
Yes.
our job is not really to understand what doesn't add up and how could it add up. It just tells you that take a chill pill, relax on the
Yeah.
sideline,
Take a chill
maybe
pill. Yes.
maybe reduce your exposure
Yes.
and just see how these things solve.
Mhm.
I remember looking at least in this year, looking at the year to date, nothing fancy.
Yep.
When the year to date performance, and it was all over the place, all over the place. The staples, it was not a typical risk on environment, nor a typical risk of environment. It was something in between, and that something in between could mean that the market is confused and there are big opportunities for an outsized gain, and rightfully so. And this is what really happened. Because there were exogenous events again. Maybe the tariffs, maybe those discussions were confusing the market, and hence the confusion that was happening within the market. Yeah,
And yeah, I agree. And sometimes it pays to wait, right? Take a chill pill. Sometimes
yeah,
relative strength will just be flat, and that just means that there is, an accumulation period of sorts, right? So I think a lot of people try to chase rallies or chase things, but the opportunities will slowly over time emerge, right?
yeah, 100%.
Yeah. And, I remember we had a great conversation about the Saudi market, but I think it's also relevant for other markets. When you look at sectors, how do you think about the lead lag relationship? Like there's certain sectors like materials that have a propensity to lead oil, perhaps. How do you kind of frame that in your analysis?
So in the Saudi market, there has been something interesting going on in the past. After we spoke, actually, people started being extremely pessimistic. Some notes on the media came comparing the Saudi market with the regional markets and like neighboring countries like UAE and Kuwait, and also international markets like the US. Everybody was saying the global markets are up 10, 15, 18%, while the Saudi is languishing at minus 12 to minus 10 now. And after that, there has been immense pessimism wave that's been going on. And in the last 2 weeks, more companies started registering 52-week lows, more than the rest. while Brent was actually improving. It hasn't been improving meaningfully yet, but it has been improving. And one of the companies that led the change are the energy names and the bank names and the materials. And this could be indicative of what's happening within China. Today, if you look at China, if you ask anybody about China, they might say, okay, the Chinese market has been going up, but they don't know that the FXI has been outperforming the S&P since January 2024.
Yeah.
That's almost more than 20 months, almost 20 months, which is an average investor or someone who's looking at the S&P or their own country or their portfolio would not really understand this. And this is actually very bullish for Saudi economy, because Saudi today is very while one of the visions of Vision 2030, one of the goals was to diversify away from oil.
Mm-hmm.
Still, the main constituents depend on where the oil is priced, and because of the deceleration of growth within China in the past few years, maybe this has impacted the oil prices, which went from the crude. I remember seeing the crude going more than to 103, the oil futures, and now it's sitting at around 60, if I'm not mistaken, breaking down below those 68, 69 levels. But this is constructive. If we do not break down meaningfully from there, and with the copper going up to the right, and if China really recovers, which is what we're seeing now from the FXI and the big companies within their sector, maybe, and with Brent improving within Saudi, then maybe it's a good setup for us to start looking at the Saudi market and start initiating position there. I like the fact that people are really angry and really pissed off because they think now this is maybe hopeless. Saudi market maybe will not really perform. But if you have a longer time horizon, it will really pay off to generate that additional alpha as we maybe move on towards 2026 and 2027, and maybe even the end of this year. One of the challenges that I see also as a technician today in the Saudi market is the lack of availability for proper ETFs to properly analyze those sectors. So as you probably know, in the US market, there are lots of ETFs that we use them as proxies of specific something that is linked to the fundamentals. And it's a little bit difficult in Saudi. So as we are growing the community in Saudi, one of the things that I really want to see is creating those custom indexes and custom indicators that could help us maybe derive those relationships in a faster way to provide the right educational material that's linked to technical analysis, but also potentially could help me in my process within the Saudi market.
That's a good point. I think technical analysis relies on good data. And I think for a lot of emerging markets, it's not just Saudi. We've done work too, where we look at other EMs, and the data can be very choppy. One of the areas is like you have IPOs that issue, and calculating breadth is very tough, right? Because the percentage of members above their average gets sort of truncated with the IPO issuance, and you're only having like a small group. And I think we've been using some of those new indices. Like I think there's a MSCI Tadiwal 30, which just solves for some of that liquidity issues. How have you kind of incorporated that nuance in your analysis?
I haven't yet. To be honest, yet, because one of the things that, as you probably know, the market hasn't been doing well in the last couple of years or so. So I personally look elsewhere to generate that alpha. And my benchmark today is the RSP. So even though I don't really have benchmark, but my benchmark to analyze my performance is the RSP. And having that benchmark allows me to know when to be super aggressive, actually, when the right environment happens. So, for example, now I already know in August that I'll have a great September, because the equally weighted started to meaningfully outperform the S&P on a few weeks basis. And even this, if you look at the smaller caps like the IWC, the small cap, the Russell small cap, or the IWD, or the WM, or even the mid caps, they all, as small as you are, you start outperforming the big one. So to me, this is an indicator that I should be more aggressive towards maybe even sometimes leveraging on a few more days. And this is exactly what happened.
Yep.
And I don't expect this to continue for so long, but so far as this is a great time for my process, maybe I should be more aggressive and maintaining that.
That's actually been like one of the most consistent seasonal aspects of the US market. Like as you lead into the September, October volatility, you'll tend to see value areas catch up, which is the equal weight, like all the other sectors, leading up to a positive Q4. So it is that relative factor of like how the small, like incremental rotation into those areas that have been unloved for the year tend to catch up at the back half. So, and I agree. Like looking at some of the difficulties in calculating breadth of emerging markets, it kind of forces you outwards to do more intermarket analysis because that gives you an edge where the data is kind of limited at home, right?
Absolutely, yeah. And maybe now this is a great segue to maybe mention some very important things about Vision 2030 and the capital market development that happened actually in Saudi.
Hmm.
So, for your listeners who don't know what Vision 2030 is, it's essentially a transformational blueprint for Saudi to diversify the economy out of oil and into new sectors and new industries. The way it's structured is that there are several programs. So where I work is the NCP, National Center for Privatization, is one of the leaders in the privatization program. For the other programs like there are quality of life that has something to do with tourism. There is the PIF program, which is, as you probably know, the Sovereign Wealth Fund for Saudi that's responsible for the big projects like NEOM, Qiddiya, Diriyah, where you will be staying the next.
Yes.
Sorry for doxing you in this podcast. And there was one program about the financial development.
Okay.
So, yeah, as a result of all the major reforms that's happening in the country, Saudi was added to the MSCI,
Yeah.
EEM, and also the FTSE.
Hmm.
So essentially, what that means is that there are now the market is less controlled by the retail investor and has more institutional representation. Also, by the end of that same year, 2019, Aramco was listed, and Aramco was when at the time of the listing was one of the biggest, if not the biggest, company in the world.
Yeah.
With a 2 billion. I don't quote me here, but around 2 billion US dollar market valuation, easily becoming the bigger company than all the major oil players combined. I think us as a technician and community, maybe one of our responsibilities is creating those really easy to read that help educate the readers about the current situation in the market when it comes to whatever we're seeing.
Yeah, so many opportunities for growth. And if you think about it, Saudi is kind of like the corridor between US and also Asia, China, right? I know that the US had recent tech relations, right? I think Nvidia is sort of building out some of the data centers and whatnot. So I think there's a lot of technological advances. As you move away from oil, you'll start to see more of those sectors come to life.
Absolutely.
Long term, I think it's a great vision. And you just came from NEOM, right? How was that?
Yeah. Neom was great. So first time I kept hearing about Neom, but this is the first time that I was here. I was with a group of Saudi leaders as part of a leadership training program, and we spent around a week there. We met Neom leadership and trying just to understand what that project is about, and even seeing some of the elements in real life. And it's really exciting. So Neom is one big project that has several elements.
Hmm.
So the most famous one, as people know it, is the line, which
Yes.
is the residential or the city element of the project, and we've seen an area where it will be built, and we've seen also the foundation of the first module of the line there. But also it's more than the line. It's the Oxygon, which is the industrial city of Neom. So think about everything related to shipping and creating things that the world would need. I'm not exactly sure what are the type of products that they're going to create, but they've showed us lots of petrochemical and chemical and industrial products.
Hmm.
And The what's exciting really about also Neom is that it's really close to Europe, so you can easily ship it from the port and connect it quickly to the world instead of going all the way back from the Indian Ocean to
Yep.
I don't know, let's see, the South Sea. I'm not really the best at
More of a
geography.
direct route. Yeah.
Yeah, yeah, it's much more direct route. And also, there will be at other regions, which is Sindala, which is the island that's
Okay.
very virgin, untouched, amazing coral reefs, and they're building a yacht, uh, like a area where people with yachts can go and chill there in the season, and also other coastal areas which will host cities and resorts and luxury resorts. That's really beautiful. But what I'm personally most excited about from as a tourist,
Uh-huh.
which is the mountains. I love the mountains, and they've showed us those nature. So as you probably know, Saudi is a little bit hot,
Yes.
and once you and you will witness that. But once you go to those mountains, the weather really starts to become really cool, and sometimes even have snows there. So I'm excited to see snow in Saudi as well.
Yes, yes, that is amazing. I think, just hearing from Yara, her podcast episode introducing the CMT presence in the region, she was talking about, they have a vision, they see it through, and it's very long term. And I think, also as investors, you have to adjust your time frame, right? Like have a long-term core, and then for us, of course, there's tactical things around that, right?
Yeah, 100%. And maybe this is a good way to mention what's happening also in Saudi. As all these projects needs to be funded, and we
Yes.
already have international investors, the U.S. investors, who are partners in some of those projects. But also we have the lending and the lending capacity and from the banks themselves. And they are at the moment they are you can imagine they are pretty stretched because of those all those ongoing projects. And this is one of those pressures that you're seeing on the Saudi economy and the Saudi stock market potentially. So you would expect that once the industrial or the commodity regarding oil picks up, hopefully you will see some of this pressure moves away, and it will be a big catalyst for our markets as well. However, if you do have a long term horizon, I believe understanding and assessing those projects could be really key for understanding also the market. And so far, it has been working great, but it's just a big investment phase with a big investment time horizon. So you would expect that uh, as you invest, generally what we see from the public markets is that some of the investors and long-term holders really hate the word invest. They like those quick gains, they like those
Mhm.
nice dividends. But as you go into an investing phase, your stock is stuck in a rut. For examples like Amazon, after the COVID, when they invested in their own supply chains
Yes.
and logistics, and Microsoft last year with the data center, which where Microsoft really underperformed the S&P massively, which
Hmm.
even though they were stuck in the same bright space, but only because Microsoft was investing way too much, they were penalized. And I think maybe our market is similar in that way because we are investing at the moment a little bit excessively, but for the right reasons, hopefully.
Yeah.
We'll see. We'll start when you come to Saudi. You will start seeing the great news. We'll start seeing some of the results of the vision. So, for example, Diriyah is already people can go there and experience.
I
Next
feel
year
like
we'll
that came
have.
out ahead of schedule, right?
It was done in phases, so you
Oh,
see
okay,
that
okay.
you will not see the whole thing yet. But you will see the phase that is ready now. Next, I believe I believe next February you will see the Qiddiya, which is the play city, at least the first phase part of it. So we'll start executing there. Now today you can go actually to the Ritzy and enjoy resorts like Ritz-Carlton, Six Senses, and St. Regis and other ones as well. So we're already seeing the product, the result of those projects for now. I'm super excited for the next what the next 6 7 years what could bring for the country.
Same, same. That's awesome. And then shifting gears towards the end, we have the CMT Summit coming up. Just talk to us a little bit about your vision for building out the Riyadh chapter and, harnessing a nice community of investment professionals.
Yeah, so I think really, my vision is to bring world-class technical analysis into analyzing the local and regional markets. We see today in our day-to-day as traders, we see a lot of super great, smart people who belongs to the CMT community or other communities,
Hmm.
analyzing and coming up with those insights. They maybe sometimes they see something different. So my goal is to build something similar within the region, and how we can link it to the other global markets as well. This is one. Two is regional recognition. There are areas within Saudi that we need to, as a CMT association, we need to work with them to gain this credibility and also the accreditation and the acceptance. And based on my initial discussions, there is big appetite for investor education, for professional development in the areas around technical analysis that could be applied towards the market. And this is we could do this if we build the right foundation. And I'm sure there are a lot of hungry people who want to know more, who wants to apply those learnings, who want to share their own learnings and findings with the rest of the community. And I'm really excited to hear from them, know what they're doing, maybe what they're doing differently, and learn together. Last but not least, I'm super excited as part of my passion from my Microsoft days. I'm excited about uh, opening the door for the young students, for the young folks who are still in the university, for them to understand more about how they can navigate market. And we could do this through the CMT academic program by partnering up with the right universities. Maybe we could do something also with the other entities as well. I'm super excited
Yeah.
about
It's a full
this.
circle moment. I mean, you started off with the education and then now you're, and imparting that vision on the future generation. So it's a really special endeavor. Yeah. And I'm so excited. I think it'll be a great event. I'm excited to meet you and the rest of our CMT family. Stay tuned and thanks so much for listening. I think that'll end the podcast. Thank you, Abdulillah.
Thank you so much, Dominic. See you soon.